How you manage your financials in your business is a critical component for your growth and for your success. Often business owners don't understand the value of having good debt. So what I mean by good debt is if you can borrow $1 to make 3, that's good debt. It's important to understand when to borrow money and when not to borrow money. So you get a line of credit if you can see that you have the business coming and you need to fund that growth. So for example, if you have to manufacture 100,000 widgets of something and you don't have the materials for it, you might use your line of credit to then buy those materials, then you deliver, receive your money, and pay off that line of credit. So consider it your line of credit as something you want to borrow and pay back very quickly. Even if you're not using or don't need to use your line of credit, it's a good idea to do so. So once you've got your line of credit, borrow half of it, pay it back the next month. Maybe 3 months later, borrow all of it, pay it all back within 2 months. And so borrowing and paying back helps the bank or the lender understand that you know how to use a line of credit. And then once a year, walk in with your income statement and say, hey, double my line of credit. And they can see that you pay it down to 0 and that you borrow again, and that's exactly what they want to see with a line of credit. Now with a loan, let's say a long-term loan, the reason to get a long-term loan is that you have long-term growth that you want to invest in. Maybe you need to revamp your brand and your website, and that's going to cost you $50,000. You might borrow that money. What you're asking yourself is, do I know that this will grow my business? Will this produce money? Can I afford the installment payment? That's a big one, right? Can you afford the actual payment? If that's the case, take the money. Take the money. It's better to borrow $1 to earn 3. Now, one of the mistakes I see, especially women business owners, is they will pay back their loan too fast. Remember that when you're paying back the loan, it's coming straight out of your profit. So you might have $150,000 sitting in the bank and owe $150,000 and think, wow, it'd be a good idea to pay $100,000 off on that loan. Here's why that might not be a good idea. Do you already have operating savings? And what kind of profit do you need to reinvest at the end of the year? Because if you pay back the $100,000, now your income statement is going to show that you had that much profit, but you may not have any money to reinvest. So it's important to pay back your loan strategically and not be so quick to use your cash. Having some savings and having some cash is a really good idea. You never know how the market's going to shift or what changes might happen when you're going to need it.